Choosing the wrong business structure is the single most expensive mistake you can make as a small business owner. This isn't about aesthetics, it's a foundational decision that can quietly drain thousands from your bank account every year. Many entrepreneurs treat entity choice as a minor task, unaware they're setting themselves up for overpaying taxes and risking personal assets. Your business structure is the foundation of your entire operation. Pick the wrong one, like an LLC when you should be an S-Corp. And you create cracks that widen as your business grows, leading to costly tax bills and legal vulnerabilities. I've seen business owners lose homes and savings because a lawsuit pierced their inadequate corporate veil. Others hand over thousands to the IRS simply because they're paying self-employment tax on every dollar of profit. The choice you make today will determine how much of your hard-earned money you keep. So let's treat this decision with the seriousness it deserves. Over the next few sections, I'll walk you through the process step by step so you can build your business on a rock-solid foundation. Let's demystify these legal terms that often seem complex and overwhelming. We'll break down the essentials so you can understand the core differences between an LLC and an S-Corp. An LLC, or limited liability company, is a business structure that provides a unique blend of flexibility and protection. Think of it as your legal shield, a way to separate your personal assets from your business operations. This is crucial for protecting your personal assets, like your home, car, and savings, from business liabilities such as lawsuits or debts. It provides a safety net, ensuring your personal wealth remains secure. By default, the IRS taxes a single-member LLC like a sole proprietorship, meaning the business's profits are taxed as your personal income. And a multi-member LLC with 2 or more owners is typically taxed like a partnership, where profits and losses are passed through to the owners. An S-Corp, on the other hand, is a different beast altogether. It isn't something you form directly with your state like an LLC or a corporation. Instead, it's a tax election you make with the IRS, a request to have your business taxed in a specific way. This election is made after you've already established your business as either an LLC or a C-Corp. The S-Corp superpower, its main draw for many business owners, is its potential for saving you money on self-employment taxes. This can translate to significant savings as your business grows. Remember this key distinction. LLC is a legal structure, defining how your business is organized and protected. S-Corp is a tax structure, determining how the IRS will tax your business profits. You can absolutely have an LLC taxed as an S-Corp, combining the benefits of both. For many small business owners, this is often the best of both worlds, offering liability protection and potential tax savings. Start with an LLC to establish that crucial legal protection, then, as your business grows and becomes more profitable, elect S-Corp status when it makes financial sense to optimize your tax situation. The S-Corp election doesn't create a different company, it's not a separate entity, it's just a different way for the IRS to tax your profits, potentially reducing your overall tax burden. One is primarily about legal protection, shielding your personal assets. The other is about tax optimization, minimizing your self-employment tax liability. You can, and often should, have both, creating a robust and financially efficient business structure. Understanding this distinction, the difference between legal structure and tax election, is the first step to making an informed decision about what's best for your business. Let's keep it simple, focusing on these core concepts, and build a solid foundation for your business success from there. The internet is a vast ocean of information, but not all of it is created equal. In fact, a lot of it is just plain wrong. When it comes to business structures and taxes, the misinformation can be particularly damaging. You need to be extra careful. Let's bust some of the biggest tax myths floating around. Myth 1. S-Corp save you money on all your taxes across the board. False. That's a common misconception. S-Corp don't magically lower your overall income tax rate. They only help with self-employment tax, which is a specific type of tax. It's a nuanced difference, but an important one. Myth 2. Forming an LLC automatically saves you on taxes just by virtue of existing. Wrong. A standard LLC by default is taxed just like a sole proprietorship or partnership, depending on how many owners there are. There are no inherent tax savings unless you actively elect S-Corp status for your LLC. Myth 3. You should form an S-Corp from day one, right when you launch your business. Not true. S-Corp come with extra costs, increased complexity, and more paperwork. And if your profits are relatively low, the hassle and expense can easily outweigh any potential tax savings. Myth 4. You can pay yourself a tiny, almost negligible salary in an S-Corp, and then take the rest of your earnings as tax-free distributions, avoiding payroll taxes. The IRS has very clear guidelines and requires you to pay yourself a reasonable salary commensurate with your role and industry. If you significantly underpay yourself, the IRS can and likely will reclassify your distributions as salary. This will result in back taxes, penalties, and interest charges, wiping out any perceived savings. The S-Corp strategy is a legitimate way to save money legally, but it's not about gaming the system or trying to pull a fast one on the IRS. The right business structure depends heavily on your profit level, your specific business needs, and your long-term goals. Don't fall for shortcuts, overly simplistic solutions, or one-size-fits-all advice you find online. The key is understanding the timing and understanding when each structure makes the most sense for your unique situation. Get the facts, not the myths. Do your homework and consult with qualified professionals. Make your decision based on real numbers, solid financial analysis, and professional guidance, not just internet rumors or hearsay. Let's move forward with clarity, armed with accurate information and a solid understanding of your options. Let's compare LLCs and S-Corp. We'll break down the key differences to help you decide which structure is right for your business. Head-to-head for 2025. We'll look at how each structure impacts your taxes, liability, and the amount of paperwork you'll need to handle. Taxes. With a standard LLC, all net profits are subject to 15.3% self-employment tax. This covers both Social Security and Medicare taxes. On $100,000 profit, that's $15,300. A significant chunk of your earnings goes directly to self-employment taxes. With an S-Corp, you pay yourself a reasonable salary, say $60,000, subject to payroll taxes. This includes Social Security, Medicare, and income tax withholdings. The rest, as a distribution, isn't hit with self-employment tax, saving you thousands. This is the primary tax advantage of an S-Corp. Liability. Both LLCs and S-Corp provide strong personal asset protection, if you maintain them properly. This means keeping accurate records and following all legal requirements. The real risk is failing to keep business and personal finances separate, which can pierce your liability shield. This is known as piercing the corporate veil, and it exposes your personal assets to business debts and lawsuits. Paperwork. LLCs are simple. Minimal filings and taxes flow onto your personal return. This makes tax preparation relatively straightforward. S-Corp require payroll, quarterly tax filings, W-2s, and a separate business tax return. This adds complexity to your tax process. Costs. LLCs are affordable to form and maintain, formation costs are typically lower, and ongoing compliance is less expensive. S-Corp add payroll costs and higher tax prep fees. You'll likely need to use a payroll service and hire a tax professional. The S-Corp only makes sense when your tax savings outweigh the extra costs. It's crucial to run the numbers and see if the tax benefits justify the added expenses. Choose simplicity when you're starting out, and upgrade when the math works in your favor. As your business grows, reassess whether an S-Corp election makes financial sense. Don't overcomplicate things before you need to. Focus on building your business first, and then optimize your structure for tax efficiency. The right structure balances protection, tax savings, and administrative effort. It's about finding the sweet spot that works best for your specific situation. Know what you're signing up for. Understand the implications of each structure before making a decision. Make your choice with eyes wide open. Consult with a professional if you're unsure which path is right for you. Let's see how this works in real life. Sarah, a freelance designer, nets $35,000 in her first year. A simple LLC gives her liability protection without unnecessary costs. No S-Corp needed yet. Tom and Jerry start a landscaping business, netting $80,000 split between them. A multi-member LLC is perfect to start, with the option to elect S-Corp status as profits grow. Maria runs an online boutique, netting $120,000. If she's still a single-member LLC, she's overpaying self-employment tax. By electing S-Corp status and paying herself a reasonable salary, she saves over $8,000 a year. The right choice depends on your profit and growth stage. Start simple, then upgrade when your profits justify it. Don't rush into complexity before you need to. Review your structure as your business evolves. The goal match your structure to your current reality, not a hypothetical future. These examples show there's no one-size-fits-all answer. Your business needs will change, so should your structure. Make adjustments as you grow. The standard LLC is the champion for new businesses, side hustles, and passive investments. If your profits are low or uncertain, the LLC gives you liability protection without the burden of S-Corp compliance. For real estate investors, the LLC is ideal. S-Corp create tax headaches for rentals. LLCs also offer flexibility, unlimited owners, foreign partners, and custom profit sharing. S-Corp have strict ownership rules. LLCs don't. If you value simplicity and minimal paperwork, stick with an LLC. Some business owners prefer ease over squeezing every tax dollar. The LLC lets you focus on your business, not compliance. It's the simplest way to protect your hard work. The S-Corp shines when your business nets $50,000 or more. At this level, the tax savings outweigh the extra costs of payroll and compliance. S-Corp are perfect for service businesses with high profits and few assets. Consultants, agencies, professionals. The S-Corp strategy. Pay yourself a reasonable salary, take the rest as distributions, and save thousands on self-employment tax. It also forces you to run your business more professionally. Clean records, payroll, and better retirement options. S-Corp open doors to advanced retirement planning and benefits. When you're ready to treat your business like a real company, the S-Corp is your next step. It's a sign you've moved from side hustle to serious business. Avoid these common traps. Don't set it and forget it. Review your structure every year as profits grow. Sloppy bookkeeping can destroy your liability protection and tax savings, especially in an S-Corp. Never commingle business and personal funds. Don't pay yourself an unreasonably low salary in an S-Corp. The IRS is watching. Work with your accountant to set a fair salary and document it. Missing the S-Corp election deadline can cost you thousands. File early. Plan your entity strategy at the start of the year, not the end. The right structure only works if you maintain it properly. Stay proactive and avoid costly mistakes. Let's wrap up with a simple checklist for 2025. If your projected profit is under $50,000, a standard LLC is likely best, simple and protective. Over $60,000? Seriously consider the S-Corp election for tax savings. In the $50,000, $60,000 range, do a cost-benefit analysis with your accountant. Holding real estate or have foreign complex ownership? Stick with an LLC. High-profit US-based service business? S-Corp is your friend. Be honest about your willingness to handle extra paperwork. Don't choose a structure you can't maintain. Take this knowledge to your tax advisor and make your choice with confidence.